In today's video, I'll be giving you another trade breakdown on the S&P 500, which banked me a 1-to-3 risk to reward. The strategy I'm implementing in this video will not only help you get funded, but will also help you to quit your job in under 90 days if applied correctly, of course. Now, if you haven't already come across ICT, he is one of the most reputable traders in the Forex industry with over 1 million subscribers on his channel. The issue with his videos, however, are that nearly every single one happens to be nearly or over an hour long. This is why on my channel, I'll be compressing all the valuable information from those long form videos into just under 10 minutes to save you all that time and make it simpler to understand. So without further ado, let's jump right into it. For this example, I'm going to be following the 10 a.m. to 11 a.m. New York time. So this is an AM session, so if it was a UK time, you'd be looking out for the 3 a.m. to 4 a.m. session. The pairs that you want to use for this strategy are the S&P 500, Euro USD, GBP USD, and NAS 100. As mentioned earlier, in today's example, I'm going to be focusing on the S&P 500. So step one is to mark out areas of liquidity prior to the session open. This includes buy side and sell side liquidity. Step 2, anticipate a breakout of buy side or sell side liquidity. So if we happen to get a sell side breakout, our entry will be a long entry after our market structure shift. Our sell side liquidity is the liquidity that is usually at the bottom. If we get a breakout of the buy side liquidity, however, then we will look for short entries after a market structure shift. So the buy side liquidity is the liquidity that is on the upside. Step 3, we're going to want to wait for a market structure shift or a change of character to the upside or the downside. So this all depends on whether we get a sell side breakout or a buy side breakout. Step 4 is to enter off of our fair value gap or imbalance, which is the middle candle of 3 consecutive candles towards the upside or downside. Now, just to clarify, the way we spot a fair value gap is the first and the third candle do not make contact. So this should look something like this. We have our first candle, we have our second candle, like so, and we have our third candle right over here. So in order to identify a valid fair value gap, you can see here the wick of the first candle right here does not make contact with the wick of the third candle. So we draw out our fair value gap like this. So this block right here represents the price inefficiency, which is separated by the first candle and the third candle. So if you guys haven't noted this down, make sure you note it down before I move on to the next example. Now, just before we move on to the live example, I'm going to draw you guys a diagram to give you a better understanding of how this trade took place. So we have our buy side up here and our sell side down here, which were formed just before our session open. Buy side got taken out like so. We created a higher low right here, higher high, and then price took out this higher low, causing a market structure shift before then returning back up to the fair value gap that was formed right here, and then price dropped down to our take profit. So once again, we have our buy side liquidity right here, which was taken out, and we have our sell side right over here. So buy side was taken out, price then dropped back down, took out our most previous higher low, causing a market structure shift. Once price caused this market structure shift, we then anticipate for a fair value gap to be formed. Once the fair value gap was formed, price retraces back up to the fair value gap, tapping into our point of interest before then dropping down to our take profit. So this would look something like this. So make sure you screenshot this diagram or note it down somewhere when you want to recap this strategy. Now, just before I get into the live breakdown, if you guys want to get funded 6 figures in trading capital completely guaranteed in the space of just a few hours, be sure to click the first link in the description, which will lead you to my Telegram, where you will be guided in the swift funding procedure. If you didn't know, the failure rate for passing a prop firm challenge is in fact over 90%. Instead of wasting money, failing multiple challenges one after the other, we can pass your challenge and get you funded 5 or 6 figures the very same day, completely guaranteed. On top of that, if we happen to fail your challenge, you will receive a full refund plus $200 on top for wasting your time. That's how confident we are in our systems. Be sure to take this opportunity and drop the message FastPass through Telegram. This is a golden opportunity that you do not want to miss out on. And for those of you who want to take this opportunity to a whole other level, I have a unique trading algorithm specifically tailored to past prop firm challenges with prop firms such as FTMO and all the other major firms who allow EA trading. Once your challenge is passed, this system also goes on to generate you anywhere from 4 to 12% a month, depending on market conditions. Now, I know that's a bold statement to make, but with many of my clients passing challenges and consistently receiving payouts, I could only imagine what a fantastic opportunity this is for you. If you're interested in joining the EA program, be sure to message the word EA to the second link in the description below. Now let's continue with the video. So as you guys can see here, this is our 10 a.m. market open. I'm going to mark that out just to give you guys a better idea of how this trade is going to play out. So that's our market open. We're going to mark out our buy side and our sell side liquidity. So here's our buy side and here is our sell side. Now we're going to wait for price to either take out our sell side or our buy side. So we're going to play price out, and as you can see, price took out buy side right over here. Now we're going to wait for price to take out our most recent higher low. So our most recent higher low is right over here, as you can see, and price just about took it out right over here. So we're going to mark that out as our market structure shift. Now, where can we see our most recent fair value gap and our clearest fair value gap? It can't be this one because we have a buy candle, sell candle, and a buy candle. And price is unlikely to return all the way back up here. So our most recent one is, in fact, this one right here. So we're going to mark out the tip of the first candle to the tip of the third candle. So just to clarify, this is our first candle, second candle, and third candle. So that is our area of interest. We're going to set our short position right over here and our stops just above our order block. Our take profit we're going to set at this most recent low right here, or this low at our opposing liquidity. I'm going to target this low right here just to be on the safe side. As we play price out, we can see we've just tapped in like so. And if I continue to play price out, there we go. We've just hit take profit. This trade banked us a 1 to 2.5 risk to reward. And this is a simple trade breakdown of the ICT silver bullet strategy. So I hope you guys found this breakdown beneficial. Once again, if you want to get funded anywhere from 5 to 6 figures in just a few hours, completely guaranteed, make sure you click the first link down below and message the phrase FastPass. If you want to step it up a level and automate your funding and payout process, be sure to click the second link below and message the word EA to get on board my program. Slots are limited for both programs, so be sure to take this opportunity while it's there. Once again, if you enjoyed this video, be sure to like, comment, and subscribe for more valuable content.